Good morning and happy Wednesday, traders. It is the 22nd of March, 2017, 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me today, yesterday, tomorrow, and every day for these Trader Bites. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance is negative, as you would imagine, this morning. We're opening in the S&P 500 futures. We're opening somewhere near yesterday's close after dropping overnight. Yesterday was an impulsive day down or a sell-off day, and so that's translating across the board to other markets as well. This morning, we saw the Nikkei and so on lower, which is expected. Crude oil's down 1.16%, down 56 cents on 47.68. That's on the May 2017 contract. The DAX is down 52 points or so, 48 points currently in the futures. But all across the board, I see red. And that makes sense. Gold is higher by $2.10. Really, the positives are the Treasury, the U.S. Treasury note, gold, Eurobond, U.S. Treasury bond, and the Japanese yen, and those are your hallmark traditional safety instruments. So the market is tentative this morning. Good for day traders to get the market loosening up. I'll cover this maybe later, but really, yesterday was unusual, and it's not something that most traders, at least I speak for myself and what I saw on our risk systems yesterday. Most traders are just not prepared for these kinds of days because they're happening so seldom. What is on deck for this morning? The key things to note uh, is that Scotland is expecting to vote. The Scottish MPs are expected to vote to go ahead with a second referendum on independence from the UK. This is going to be very important. Um, the referendum is expected to take place between the fall of 2018 and spring of 2019, so a year and a half from now. Japan's exports surge. Uh, the Ministry of Finance reported that that exports surged 11.3% year over year. This represents a 28.2% versus increase versus the year before. That's a big move. And that's really it. As far as what we're expecting for today coming into the session, we just got FHFA housing price index month on month. The expectation was zero point 0.4. We got 0.0. And then following that, we're looking for existing home sales at 10 o'clock Eastern. That is a February number. 5.55 million units are expected to be reported. And then at 10:30, we get crude oil inventories, distillates, and gasoline. 2.65 million barrels on the positive for crude oil, surplus for crude oil. Distillates expecting a deficit of 1.25 million. In gasoline, expecting a deficit of 2.45 million. As far as speakers, we've pretty much covered what we had uh, with speakers. There are none listed or expected for the day unless the White House wants to say something, given all the messiness that's going on with politics these days. But not much expected or planned for today. Let's switch gears here and take a look at what was expected for yesterday. Now remember, yesterday when the trader bet was going on, we were on the edge of the prior day's range high, and the expectation was for the market to potentially dip down to 2373, find a bounce, and then start moving towards 2382. That was the primary hypothesis, and really it makes sense. The market has made a reversal up here and has been walking down, and now it's gapping up. So the expectation is for something that looks like that day to day. But boy, was I surprised when it not only took the range, but it went 30 points beyond the target I had set at 2370. Um, and so that's a bit of a surprise. I could tell that the market was starting to get heavy in the morning. I did post about that in the S5 chat room, saying I'm expecting it to get back into the range, looking for areas to get short. And so that was hypo 2. Hypo 2 was looking for an open auction, a test higher, and then a rotation down. And then the goal was the 2370, which it would likely take, bounce around in here, and then just sit sideways for the rest of the session. Here's what actually happened. This is the daily as I inspect the overall view. This is a two-tick Renko chart, and it gets really noisy, of course, because there are a lot of rotations on these types of days, these big move days. So I'm switching to 4 for now. You can see early on we pushed up to 2378.75, and then we were unable to hold prices up top, and the expectation was for a push down into the 2370, which got a tiny bit of a bounce at 2370, and then it just continued through, breaking the prior day's low. And then once it did, it got to this naked point of control and naked close from the 14th for a pause, and then from there it could not find an opposing bid that was sustainable, and it just continued to move down. The next area down was this closing gap. Remember, there's a lot of repair to be done below. We have huge areas of just the market making a move, gapping, and not retesting that area, even if it's not a gap zone, even if it's a closing gap. And that's what these are. These orange dashed lines are closing gaps that remain open, and you could see that it bounces on the gap, moves down to the next closing gap, moves down to the next closing gap, and that one finds a bid, and it starts to rotate up from 2344.50 to 2356. That doesn't sound like very much. That's a 12-point move, 12-point move on just a rotation, which is, that's pretty much the day's range in one rotation. I'll show you what the volume looked like here in a minute. And then we continue to seek down, and we're unable to finish anywhere in the middle of the profile. The fact that we have these HVN drop, put another HVN in and drop, put another HVN in and drop again and again and again and again. These are hallmarks or fingerprints of a trend day. In addition to that, we hit we pushed through 2 times the IB low. That's this little dotted line here, the little dots. That's 2 times the IB low. That's another mark that we have a trend going, even though the IB, which is these yellow lines, the IB marks the first hour high and low. So the premise behind this is that most of the business is done by the higher time frame in the first hour trading, and then the rest of the session is basically spent on discovery, repair, range extensions, things like that. So the IB is important to me, engaging how the market is moving, and 2 times the IB is one of the requirements of a trend day under that 18.3% statistic that we would have a trend day. The point of control, another mark, is the point of control is in the lower quartile or the lower 25% of the range. So if you split the range up, this is the mid right here. So half of mid, that's the first quarter, and then halfway down. So that's quarter 1, 2, 3, and 4. The point of control and the market finishing in the lower quartile also defines a trend day. So those are the things, those are the items I'm using, and you can create whatever criteria you want as long as you stay consistent and your statistical research is built on that, then it's fine. And then the market was unable to find a bid big enough to push back up into and towards the mid. Notice that the market has moved away very rapidly. One second. Has moved away very rapidly from VWAP and from the mid, and it just could not come back to it. Another indication. So overall, I'm very, very happy to see this. The low of the day is the naked point of control from way back. I believe it's, hang on, you can see it better here. So the naked point of control, and it's the MC point of control from the 15th through the 17th of February. This is where the MCs are important. So we pulled all the way back down to this micro composite here. So we have closed this micro composite point of control just a few days ago, or a couple of weeks ago. We put in another microcomposite point of control, and we touched it the day before. We closed it right here, and now we've moved to the microcomposite point of control down here. And then, of course, if we continue lower, then the higher time frame target will be the microcomposite point of control down here, except it's not a valid microcomposite point of control because it is built on a trending profile. There is no balance here. Compare this profile up here, right here, with this profile up here, down here. It really isn't describing some sort of auction or some sort of consensus at all. The last one is right there. The one before it was right there. You want to see these nice fat Gaussian. Remember from statistics class, they look like this, a normal distribution of a histogram with one sigma, in the middle of it. That's basically what we're charting, except we're turning it on its side, and we're looking for what is this highest population, and that's what we call the point of control. And below here, below this profile, we get these choppy, trendy kind of days that do not show any real consensus on price. So you can see the volume on these profiles is not really Gaussian. There are a lot of high volume, low volume nodes chopped all over the place, and as a result, you get this profile that shows that this area here was very, very poorly auctioned. The big area to test below really is 2285. That is the next key area, and that's that's what we're hoping for, that we would test. Yesterday's volume. So let's look at this for a minute, just so everybody understands this. I posted this yesterday in a tweet stating where we are. The yellow lines that you see here, these are 20-day averages, a 20-day average of what volume looked like in that 15-minute time slot. This is a 15-minute chart, right? So for every 15 minute, what this is doing, what the yellow line's doing, is it's computing for that particular time slot, and I can change this chart to 60 minutes, 120 minutes, 10 minutes, 5 minutes, 1 minute. It'll tell me for that particular time slot what is the average. Now, you've probably heard me before. If you've heard any webinars, you've probably heard me before talk about the fault with averages when it comes to real life data. Averages do not really represent the population because there's a thing called skew where you could have an average, and the example is four guys sitting at a bar, each one earning $70,000 a year. I have an average of $70,000. That's a nice, pretty picture there, and it does represent what the average is. And then in comes Bill Gates, earning $5 billion a year, and now the average is skewed way up is moved way up, and then you're describing the average as somewhere in the millions, right? Now the average is each one of those six guys now are making, whatever that average becomes, $200-300 million, which does not represent the situation at all. So I just caution you on using averages when it comes to trading, but here's what the average is right down here. See that? Early on, right from the second bar, you could see what the actual volume was. So from the second bar or the third bar, the second bar was normal. The first bar was normal. You could see the yellow lines going right to the top. Um, the norm is 85,000. In the first 15-minute bar, we got 82,000. The second bar, the norm is 54. We got 48. So to me, Hypo 1 was in play. Um, Hypo 1 was in play. And remember to change your screen. Um, Remember to change your screen to 1080p to see the details of these charts. You have to select the thing in the bottom right corner and switch to 1080p for clarity. The third bar, now we're trading 97,000. So you can see 97,000 traded versus 56 or 57,000 expected. Next, 124,000 versus 51,000 expected, and so on. I mean, the volume here versus what we've been getting, despite the rollover, um, is very very high throughout the session, even during the sleepy time. There was a lot of activity, and what this is saying is this move today may have a lasting effect. We've had sell-offs a little bit, but we've had them on pretty average or pretty normal volume. The other thing I want to show you, this is my daily chart. This daily chart is built on RTH only or day session only. The last time we had this much range, which was yesterday's RTH range, was 40.75. Just call it 41 points. 41 points for the day. The last time we had this much range on a sell-off day, you know, we had this here in on November 9th, but that was a buying day. The last time we had this on a sell-off day was September 9th. September 9th. So it's been a while since we've seen this type of range. The time before that is June 24th. These have become a rarity. Yes, 40 points of range is pretty rare, given that in general the S&P trades around. If we look at our range statistics, the S&P's normal, what we would consider normal range statistically, is between 6 and 23 points. 6 and 23 points, with 7 and 23 points, with the most common being 11 points. So when I say this is normal, the expected range for the day is around 10 to 12 points. Really, it's around that 11-point mark, and this chart here is consistently updating that information for me based on this start date of the 8th of the 24th of August 2015. It's taking that sample size and it's computing what the statistics are. Volume was very, very high. Again, the last time we saw selling volume this high goes way back to right back here in June, in September. Okay, and so this, what has the market done since then? Since it did this way back here, it basically rallied right back. The next day we went. This is the bar. The next day, it moved right back up. The data before that in June, same thing. We had a pretty good volume day here, and then the next day continued lower, and then we rallied right back up. So this is the day that's similar to what we had. We continued lower and then immediately rallied back up. It's been a very resilient market. So it's important to watch today to see how the market responds. The expectation for today, the normal habit for today of the market is for it to continue lower. We expect an extension. We expect this to be impulse one and continuation, and then potentially a push higher. However, if you look at a higher time frame, this really can be seen as one move with no pullback yet, and so continuation to exhaust the late sellers into the move down, and then start the corrective move if there is one. Overall, we didn't accomplish too much despite the large sell-off. We're still holding in a cluster up here in what looks like a flag pattern. This may be the beginning of a sell-off. Who knows? 2360 becomes key above at this point, and overall, I was very impressed with the action yesterday. We finally have a day that the market is where the market's moving. A quick look at order flow since it is Wednesday. I just want to show you what things looked like early on. Early on, the white here, if you don't know what this is, the white here represents the highest bid or offer. So white represents the relative highest bid or offer on the heat map. This is a product called S5 Bookmap. I use it for execution and a lot more. And you could see that early on, right here, we had a lot of participation from both sides right at the open. Earlier, actually, let me scroll this back. So earlier, we had a lot of participation from the open, and then the market moves back into range to 2370, and we get the usual log jammed market, and the anticipation that the market's likely to bounce and go sideways. But what it does instead is all of a sudden in this area here, you see that the bids and offers get relatively thin, and the market just starts to not find its base, not find its support, and so overall, it starts to operate almost in an ideal scalping situation. In these situations, I identify, if you see these horizontal lines, these are lines that I draw in here. These horizontal lines are just areas for risk management and also for entries. I'm looking for zippers, zipper, zipper. These are all areas that I'm looking for risk control and management based on market generated information. But overall, we had a very strong sell push on the close. You could see here in the CVD, the cumulative volume delta, that the big lots, the large lots, as well as the unfiltered lots, you could see there was a lot of selling on the close. What we've seen in the past on sell-off days is this CVD starts to push up while price stays sideways. A lot of covering on the close. But what this looks like is trapped longs that had to liquidate on the close, right on the stock market close right there. Very interesting day. Very interesting day. And the order flow yesterday, if you do have the software and you record the data, and if you don't record the data but have the software, let me know. I can send you the data file. Just an excellent day to monitor as far as order flow. Things have been when things loosen up, the market tends to respond in a very logical way. I'm way over my time. The hypotheses for today, as I said, is a continuation of the move lower. The expectations for the market to push, to attempt to respond, but I'm looking for a lower low today, and then for it to lull unless there is news. So in general, I'm looking for the market to make a lower low and make an attempt at pushing, extending this range. This move to me is still incomplete. Now, if we open and we start to see an open drive higher, forget Hypo 1. It's not working, okay? But if we get an open auction and you see resistance in the 43 area or so, and it tends to be well offered, tends to have sellers, icebergs in that area, whatever, then that's an indication that the low the low is likely to be taken out, and it's likely to continue to push lower and extend the range lower. And so our target becomes this 2332 naked point of control, which happens to be the overnight low. That becomes our target. I'm not expecting another 40 point day. Generally, we have a 40 point day, and then we have a 16, 17 point day the following day before the market rests. That's the primary hypothesis. If we do get a push on early and we take this out, then I'm looking for it to start to attempt to move back. I expect it to hold down in the lower end of the range here as it pushes back in and after doing its job and finding its buyers. Remember, the markets sell off to find buyers, and that would indicate a successful mission to find those buyers below. I leave you here. There are other hypotheses here I wanted to cover, but I talked too long and the market's about to open. Everyone here needs to prep for that. Good luck. Take care.